Well, there's been a lot of noise lately about silver potentially breaking into an entirely new price range this year and not looking back. Some are calling for explosive moves, even life-changing gains, but in this video we're going to slow things down and separate what's real from what's just hype, so you walk away smarter, calmer, and actually prepared for what this market might do next. Because here's the truth: yes, silver has been strong. Yes, miners are waking up. And yes, the broader money system still has long-term pressure building underneath it, but a real bull market and a straight-line move to extreme price targets are not the same thing. When people blur those lines, that's when mistakes happen, chasing tops, panicking on dips, and ultimately missing the bigger opportunity. Now, the bullish case for silver isn't made up, it's grounded in real behavior. Silver is finally starting to act like the faster, more aggressive metal again. For years, it lagged behind gold, frustrating investors again and again. But when that dynamic flips, it can flip hard. Silver doesn't move slowly, it builds pressure, stalls, shakes people out, and then suddenly explodes higher. We've already seen glimpses of that in this cycle, and even after sharp pullbacks, what matters most is that buyers continue stepping back in. That tells you demand hasn't disappeared, it's just resetting. And that's a key difference most people miss when they get distracted by headlines or short-term volatility. But here's where we need discipline. The idea that silver instantly rockets to extreme levels like 300 or 500 in a short time frame that's not supported by current data or mainstream projections. Most realistic outlooks sit much lower, even in bullish scenarios, and that's okay, because silver doesn't need to hit the most dramatic number to outperform. In fact, if you get too attached to one massive target, you risk missing the entire move while waiting for something the market never promised. A smarter way to think about this is simpler. Has silver entered a phase where it can consistently outperform gold, attract more capital, and push into higher price zones over time? If the answer is yes, and right now it looks like it might be, then that's already a powerful setup. At the same time, this isn't a one-variable story. Silver isn't just moving because of fear, and it's not just moving because of industrial demand, it's both. It's a hybrid asset. It reacts to monetary pressure, inflation concerns, geopolitical uncertainty, and real-world usage like electronics and solar. That's what makes it so unpredictable and so explosive when momentum builds. And when you bring miners into the picture, things get even more interesting. Miners can amplify gains, but they also come with added risks, costs, politics, management, and volatility. So while they offer upside, they're not a free ride. The best moves happen when the metal itself is strong enough to carry everything else with it. So where does that leave us? Simple. Gold remains the foundation, the steady store of value. Silver brings the speed and upside. Miners bring the leverage. Each one plays a different role, and the biggest mistake right now is treating them like they're the same thing. This market is evolving, but it's not moving in a straight line. There will be volatility, there will be shakeouts, but that doesn't invalidate the bigger trend, it's part of it. So instead of chasing hype or fearing every dip, focus on what the market is actually proving over time. Because if this really is the beginning of a larger shift, you won't need to guess, the price action will keep confirming.